All right. Well, welcome everybody. This is Jack Miller with T360 doing a quick LinkedIn Live overview of our release of the Mega 1000, which was released today. So if you're joining us, what we're going to cover today is we're going to talk about the top 1,000 brokerages in the real estate industry and give some kind of quick interpretations of what's happened with the top 1,000 brokerages over the last year. I have here with me my trusty partner in all things research, Paul Hagey, who's our Senior Vice President, Editor-in-Chief of the annual Swanepoel Trends Report and the Real Estate Almanac, also an associate partner with T360. So welcome, Paul. We're delighted to have you. And congratulations, you made it across the finish line. We got the 1,000, which is the big work here. Signed, sealed, and delivered.
It's a big lift, and as you said, it was launched today. And I want to shout out Dr. Paul Bishop, who's on the team, who's kind of in the nuts and bolts of getting all this data organized and streamlined and making sure that we're accurate. There's 1,000 data points here, as you can imagine. It's a lot, and it's more than that actually, because we track many more companies. And just to add some context for where this sits into the Real Estate Almanac, which is every year we publish data and research on different aspects of the industry. This is the last section of, we publish it sequentially in the start of the year. We start with the SP 200 that comes out, the leaders, ranking the most powerful leaders in the industry. They would organize real estate in February, have rankings of membership and MLSs and local associations and state associations. Then we have technology in March, and then we have corporations, which incorporate brokerage companies at a different angle, so franchise brands and enterprises, and now capping it with the brokerage companies. And that's what the Mega 1000 is that we came up with today. So I wanted to start, just briefly, the methodology pretty standard. There's a survey, we verify data, we get data straight from organizations, but the Mega 1000, our primary filter is by sales volume. And Jack, I know you were we've been doing the Mega 1000 since 2018, based on 2017 data, because it comes out the year after. You were involved in, like, you and Stefan deciding to use sales volume as the orienting principle to look at brokerage. Maybe just ask, just to recap, why we are choosing to kind of orient our approach to that.
It's a good question. It's a good question. I think the reason we picked sales volume as the primary ranking factor. Now, we also rank by transactions. We also rank by agents. We do all the rankings by other stats, but we decided that sales volume was the primary, really because when you look in the world outside of real estate and how business is looked at, that's the number that people talk about, is what's the top line, the big sales volume number, the revenue number, whatever it is. Like what do we refer to that makes sense of that, and transactions is interesting, and we have a whole discussion about why transactions are interesting, especially in this industry. But we felt that sales volume and the dollar amount of the homes sold is kind of the easiest to translate into the public markets and into other industries like finance and mortgage and those places where you can compare. So you can actually say, I got a mortgage company that sold $2.5 billion worth of loans. Well, I have a real estate company that sold $2.5 billion worth of real estate, and it makes sense in that.
I think I understand it's like also a decent proxy for revenue, because because it depends on model, of course, and a bunch of other factors, but there's an element there. So,
we think it's a stronger indicator for revenue right now than purely transactions, because of how many transactions have a component of the sales volume in the revenue generated. So that's why.
So, if you go to realestatealmanac.com right now, anybody watching this or watching this on replay, you can see the data live is presented. We have the largest brokerages by U.S. sales volume for 2022, full year 2022. Same thing for the top 100 by transaction size and top 100 by agent count. And you can filter those by the navigation at the top there. So we're going to dive in next to kind of the top 20, Jack, and just there's some interesting development and some and so once you take a few of the ones that stood out, some of the
sure, yeah. I mean, the first three bullets you've got there are notable. No change in the top three. Compass retains the top spot with the most sales volume in the industry under a single brokerage. 5 of the top 10 had, or top 20 had growth. So not everybody had a down year. There are still some companies that grew year over year. This one I find fascinating, that half of the top 20 were founded since 2000. So we've effectively, what that means is we've pushed out, there were 10 companies in the top 20 that are no longer there, that have been pushed out by newer competitors.
Or acquired.
or acquired in some cases. That's correct.
Many
There's
cases,
acquisitions as well. They've either been pushed out or acquired, but they're no longer the dominant forces that they used to be in their prior form. And these new companies have, and some of them with newer models, have come in and are now showing some serious legs by moving into the top one.
And nearly half of them are part of public companies, which is another interesting facet.
That is,
and add in by capital backed companies like At World and United Real Estate and Peerage, it's over 50%. So we're in the age of big real estate now. It's really
that's been a big change. We had in the 90s, we had the beginnings of corporate consolidation and public companies participating in real estate. And what's happened over the last 20 years that we've seen is greater and greater. Now we have more public companies, and as you said, more private equity companies that are getting involved. Also, Majestic is another one that has a private equity backer. So, and those have been driving a lot of the consolidation and the acquisition trends that we're seeing, is these, either private equity or public company money that allows them to roll up and acquire more.
Scale and money.
Yeah, it is a big change. The slides I'm even more excited about the slides we're about to show, because it really shows what has changed in the last 5 years. It's fascinating.
Let's jump there.
Yeah.
So going to the next slide, the production growth over the last 5 years. So this is the data that the Mega 1000 tracked. We launched in 2018 with 2017 data. 2023 is 2022 data, full year data. And you can see the larger getting larger. This goes to the point we were just talking about on the previous slide. Like, it takes more sophistication, more capital, more scale to outpace the market. So you can see on the left, the market is over that 6-year time period. The sales volume grew 42.7%. But if you look at the top 10, which was the highest growth segment there, 135.7%. And
it's unreal.
It's on,
yeah.
This tells the story in black and white of what's happening.
Well, it's a concentration of sales volume at the, in the largest brokerages in the country, which, if you've made it onto the Meg 1000, congratulations, you're in a very select group. I mean, this is a group that outpaced the market, outgrew all the other brokerages substantially. And then as you move up, and like I said, as you get into that top 10, really did the best job over the past 5 years of accumulating sales volume and outpacing the market overall.
Yeah, and just on first glance of the slide, it's not, the segments aren't oriented by the size of the segment. They're oriented by the leap. Just to be clear. So the second column is Mega 1000. Those are the 1,000 largest brokerages. The next one is top three. So just as you're glancing,
but all being compared to that first column, which is the market. The market grew 42%, but if you're in the top 1,000, you grew 78%. If you're in the top 10, you grew 135% compared to 42%. So that's a pretty substantial outperformance of the broad market.
Yeah,
very impressive.
So we have some more diving into the market share. So that was just straight up growth in sales volume and transaction size. We did some analysis based on market share using NAR's existing home sales data as kind of the proxy for the larger market. And you can see here that the market share is increasingly concentrating. Once again, it's another way to tell that same story. And the largest companies are just taking more of the market share.
That's looks like a 13 percentage point jump.
Yes.
Just by being, if you're in the top 1,000 brokerages, the top 1,000 brokerages now control 2/3 of the sales volume, in the US based on NAR's overall number. And that's up 13 points in 5 years. And so that just, again, it tells the story. Sales volume is being concentrated in these large companies.
And if you look at just the top 10, that's a quarter of all sales volume. in the top 10, and a jump from 15% and from 2017. So that's, once again, this is just putting some numbers behind something we all feel and see, but it's kind of making it more black and white. And for brokerage leaders and others out there looking at this, it kind of gives you an idea of like, okay, there's other ways to succeed, but one of them is definitely and increasingly becoming scale and efficiency and figuring out the capital required
Yes,
to
absolutely.
compete. So here's the same similar slide, just using transaction sides. So it's the same story. So the Meg 1000, about half of the transactions are now done by the 1,000 largest brokerages.
Which is interesting to me. It says the difference between the sales volume and the transactions sort of reinforces our decision around putting sales volume as first, because what it tells you is the large companies are going after the more attractive high dollar real estate, is that they're pursuing not just luxury, but mid-market and up. That's really the strategy, because that's where there's the largest pool of commission dollars to pursue and the most attractive client base. So that's what's happened, which is why the transaction count drops in terms of it's only half the transactions are in the top 1,000, because there's a lot of transactions for whom the sales volume is relatively low. And there's, and that's just what it is. They've just said, these big companies have said, we're going to go where the money is. And that's in the up mid and up market and luxury market.
These reflect probably the strategies that we see in those boardrooms. Like, okay, let's go to the higher markets and fill in. And so we anticipate these transaction size will then creep up as well as they fill in. A lot of these companies, we can see them, they're filling on the coast and they're like starting to go into luxury markets in different parts of the country. And then they expand out in that way. And that's definitely happening. And some companies have specific strategies like that. Others are doing it in a little bit different way. XP and the real brokerages and another that kind of a little bit more populist
yes
approach.
Right.
So then we're just looking at, if we're looking at the segments and the market share growth by Mega 1000 segment, using like whether it's the top 1,000, the top 100, top 10, you can see that the largest growth between 2017 and 2022 was the top 10. Like that is really where that outpaced all the other segments, which I think is really interesting. So it's, we're it's not the top 3, it's not the the 1,000 are doing it, but this is where the power.
That's the most growth. Although I think it's really interesting, the top 3, and likely because of Compass's presence in the top 3, tells the story about the pursuit of sales volume again. It says, okay, we're going to go after high dollar, more luxury type of markets, urban markets that have expensive real estate, which is why you see that substantial sales volume growth versus their transaction side growth. So I think that's notable. But yeah, the top 10 did a great job here. They really did.
Yeah, and that reflects some of the big acquisitions, and they're rolling up essentially into these companies as they move up into the top 10. Like Atworld is a good example. They acquire some large companies and they just start rolling up, and that's what we see in the top 10.
Yeah.
So this is always an interesting way to look at this data, is year over year growth. And we'll first look at volume. You can see the real brokerage, which is kind of feels like it's come out of nowhere, even though it hasn't. Essentially, for those who haven't dove into the model, it's essentially similar, very similar. I don't know if copying is the right word, but eXp Realty kind of model, a version of it. They have revenue share, they have low caps, they have relatively aggressive splits for agents, and they're a public company. They're based in Canada, but they're a public company. Anything to add on Real?
Yeah, I think this is it's not a movement until there's more than one. And I think EXP really, I think you have to credit EXP with starting a movement in this sort of model of company, because you have the Real Brokerage, you have Fathom, you have a number of other companies that are lightweight, tech oriented, inexpensive, moving quickly to acquire a lot of market share. So I think that I think you have to credit EXP with kind of being the granddaddy of this thing, and then Real Brokerages is capitalizing on it and saying, hey, we can also play in that space and we can play hard, and they are. So
Yeah. And it's interesting because then we have peerage down below. Before we dive into peerage, this is like the one is organic growth, like by the model, fueled by the model, which is that revenue share is a big part of that. We've covered that before, why EXP is so attractive, because it has that incentive for agents to recruit other agents and people to come in, and it's easy to start up. And then peerage is acquisition. They're jumping by making 2 huge acquisitions in 2022. They have a lot of Sotheby's affiliates in their portfolio. So they're essentially, once you describe their model, Jack, because I think it's a pretty unique model. And
yeah. So they act as a capital partner and also a partner in other ways with the firms that they acquire. So they typically do not take out the executive management team. They retain the executive management team of the brokerage, and then help them by providing finance, help with their structure, their technology, their programs, and kind of give them some extra oomph that you don't get when you're on your own. And so that's part of their value proposition. But they bring capital into the equation, and they're leveraging that across multiple, many companies that they're now purchasing to get economies of scale when they purchase technology or when they do major initiatives. So that's their strategy.
And
they're not the only one. There's others that are doing similar, saying, hey, we're going to bring a capital partner into the brokerage business, and have them help us with hiring and management and kind of growing as a business.
World is a good, I think, probably a similar approach. Like they have a major capital partner, and peerage it doesn't take 100% equity of the companies they acquire, but it takes a majority, so it does, as they talk about it. Gavin Schwartzman, who runs it, they talk about they really view it through a partnership. So it's an interesting model, and we've covered them before, and we'll cover them some more because they jump into the top 10. I mean, they're number 8 this year, and those acquisitions are really fueling it. So it's interesting. Tell 2 ways to grow: organic acquisitions, and both are working warp speed in the industry right now. So that was volume. So looking at transaction size, again, the Real Brokerage just kind of it took off in the last year. Really, it just like, I think it was in last year, it was in the 80s for the Mega 1000, and now it's top 20. And another one that stands out, if you look at this, obviously, is Jason Mitchell Real Estate, which you and I we talked just before. We hadn't been on our radar in a major way before, and doing some research and we'll be covering them as they're starting to climb up and make moves. Is their referral model. It's a pretty interesting model. It seems like they're really partnering with big companies, and they're referring those. It's kind of a referral engine, a machine, to their agents in now 22 states. So and it seems to be.
Yeah, it's interesting. I would now, when them hitting our radar this way, like, I think we need to do some more digging and learn a little bit more about them. So that's to have that kind of increase in size year over year. I mean, that's impressive. So let's find out what they're doing.
Yeah.
And then you noted United on here, which again, I think they've been growing by some acquisition, also growing organically. So and they're big in this space. I mean, 50,000 transaction size is that is not small. That's a lot of transactions.
And I think it's the one that we've called out that's at a flat fee brokerage, an agent flat fee. So and this is increasingly, I know it's tempting and attractive for brokerages as margins and everything compress. It's like, this is that known, it's like they're a monthly membership fee, or they have different brands and they break down different ways, but that's essentially the concept. Is like a Brimax is kind of similar. It's like, all right, this is a known model. Fixed this cost revenue every month, regardless.
Fixed cost model tends to do well in a market where people are looking for how to keep more money, and that's where we are in the market right now. A lot of agents are saying, how can I keep more money? So they're looking at options like United.
So this is kind of our first analysis pass. There's a lot here, and expect, everybody watching, expect a lot more breakdown of analysis of what's happened with the companies, and also what the numbers mean and what to do about them. And we're going to continue working on that. And we have one more note about We don't cover independent brokerage, or we don't break them out. We have the data, we have them noted in our data files, but we haven't emphasized it in the 6 years we've done this report. And there's a very strong reason. Actually, we're coming out with an article to kind of explain exactly why we think the term is hard to, it's not as meaningful as it's described generally in the industry. And Jack, why don't you jump in?
Yeah, so this one we've debated a lot, whether independent brokerages, is that a useful term in this day and age? And we believe it's becoming less and less useful, and we've just elected not to use it as a designated category. And it's really simple. It's because there are many firms that they're members of Leading RE, they're members of the Realty Alliance, and they would say, well, we call ourselves independent, and those were organizations created around, mostly were serving independent brokerages. They weren't serving franchise firms. But now within both of those bodies, there are now some of the independents have gotten so big, now they offer franchises. So there's a number of companies like a Cry Like and a Windermere and a John L. Scott, where they have franchise arms. They don't consider themselves part of the franchises, the national franchises, but they are in fact offering franchises, and they have
the flip side of that, or similar, or relatedly, it's like some of these brokerages in the past, the national brands were able to provide national scope to these local companies, but now there's national brokerages like with national brands like Compass and EXP and Redfin, who have national footprints and are based essentially national brands. But you know what, I think there's a more important element to the call out of why it's maybe misleading, and maybe the emphasis on independent is maybe a little bit overblown, or creates an inaccurate interpretation of what's happening, is because ownership and leadership of the brokerages really determine the success or failure. And just because you're franchised, you still have an owner, and the leaders have to manage it. So that's where I think it's we're talking about this, and we're going to put this in the piece. It's like the focus is on that, and that's what we should be really focusing on for how to evaluate companies.
Yeah, the leadership's far more important than whether it is affiliated with a national brand or a regional brand. That's the dominant factor, is who's leading and what are they doing and how are they using, if they have an affiliation, how are they using it? I think it's absolutely
those elements matter, but it's the leadership and ownership have so much bigger weight. So let's so that's a note of why you don't see us breaking that out, and why we have a separate list, and when we'll call it out, we would, but we have decided not to, and that's why we haven't. And I think it's something that the industry at large would be kind of smart to adopt, and as the filter to more accurately and meaningfully talk about what's happening in the industry with all these companies. Something for further conversation, I'm sure. And
absolutely, and I look forward. We do some more analysis. You talked about that earlier. I know that some of the analysis we didn't display today, the per person productivity and rankings and understandings around that. And so that's where I'd say tune back in if you're a broker, knowing about the per person productivity trends. We do them. We cut them up and say, look, in certain price classes and certain kinds of companies, to help you better judge your per person productivity based on a true comparison to similar businesses as yours. And we usually do that in June or July. So look forward to that, doing that with you, Paul. I think that'll be very valuable to the brokerage community.
Yes, I agree. And check out realestatealmanac.com. You can see all this data. You can see all the other sections we've done. The corporation section is kind of a cousin of this one, where we're looking at enterprises and the franchise brands that are kind of in the same brokerage company orbit. But I hope you value and use the data, and it helps you improve your businesses. And check out the website, and stay tuned for more analysis and research from us.
And we will see everybody back again when we have more research to release. And enjoy the realestatealmanac.com. Paul, it's always a pleasure, and we'll see everybody next time.